Overall, the stock market isn't really looking too good. We got a lot of news moving it, a lot of plays to talk about, and just a lot to talk about in this video that you guys don't want to miss. We're making some new higher lows and stuff like that on the stock market overall, and some key stocks that are kind of standing out. But with that being said, man, let's get started with this video. If we zoom in just a little bit more, man, we were kind of breaking up just a tiny bit on the S&P 500 and the SPY overall, but then we stopped after the ISM came in, and it came in, honestly, pretty low. We had a pretty rough move yesterday. The ISM did come in lower than expected. It was 50.1 versus the 51.5, and anything above 50 is still pretty good, but data like this is pretty sensitive, especially after last week's data. So like I said before, we did see an overall move to the downside in the SPY and other stocks. The service sector accounts for 2/3 of the economy. Economists worry about some businesses can struggle with Trump's tariffs, and some of these tariff impacts can finally be felt overall. We are getting a lot of bad news with tariffs overall this week. I think the only good news that we got was the European Union giving us a pause overall for 60 days for counter tariffs, but then Donald Trump did come out yesterday honestly beefing with European overall, saying that they only did the investment to get lower tariffs and that he might do higher tariffs on European Union overall. So that was pretty bad. That kind of canceled out that good news that we got. But we also got some potential semiconductor tariffs, and there's a plan coming as soon as next week. So this can look pretty bad for semiconductors, unless it's not really that high. Maybe it's 15%, and people aren't really, maybe people are pricing in 25%, and then we might get a break to the upside overall. But another thing that can bring the overall market down and some of you guys' favorite stocks down is the recent buzz on the new semiconductor tariff coming out as soon as next week. Nvidia, AMD, Broadcom, and other chip stocks has been helping push the market up, and a bigger tariff can cause a bigger sell-off for the overall market and for these stocks. And even any other AI stocks that need to buy these chips. So, think of, Tesla, Microsoft, stuff like that. When this tariff buzz did come out, we did see TSM break down a decent amount. They make their semiconductors in Taiwan. We did see a big sell-off with Nvidia overall. I did scope out a decent play at around that 176.5 level. I was watching that pretty hard. And honestly, I think I bought this one right here, went up. I think I made I think I sold it at 20%. Right now, you guys can't really take too many profits. I used to go for like 50, maybe even 100% sometimes. But right now with this slow market move, you got to go a little bit lower. I think I sold at around that. Actually, I sold around that 178.40 level right here where this white line is. And honestly, it did start going up a decent amount to 179. I honestly wanted to see if it can touch that 180 level, but honestly, it's not really looking too good, especially after hours. It's breaking down even more. We had a gap up, but now it's kind of just filling that gap back down. So honestly, man, keep this in mind overall for semiconductors and AI stocks in general. AMD also reported some bad earnings that we're going to be talking about a little bit later, and they broke down a decent amount, like $10 almost. So honestly, actually, yeah, $10. So honestly, man, if you guys had a put option in AMD, it honestly broke down a decent amount, and it's kind of bringing Nvidia down. And brought it down after hours, and then now it's kind of still bringing it down. But it was mainly AMD. I think to summarize it before you get more into it, it was mainly their data centers didn't really look too good, and honestly, man, it brought their stock down. But they are saying the chip demand is still high, so it can bring other stocks up with the chip demand. But honestly, data centers on AMD didn't really look too good overall. I'm still scoping out some Apple, man. We're making some higher lows and stuff like that, so we might be breaking down even more as the days progress. With that being said, if we can break this trend line, I made two of them, but I'm mainly looking at this one right now. If we could break this trend line, we could probably see maybe a 205 to 206 break, and or some better news with AI in general. Maybe if they actually put money out, you might see Apple finally break to the upside. We're getting more news. You got the new iPhone coming out next month. But honestly, man, with the iPhone 16 sales, it seemed like everybody upgraded to the iPhone 16. And honestly, I don't think people are really gonna upgrade from the iPhone 16 to the iPhone 17. We're still gonna see some sales, but it's probably not gonna be as hot as the 16 in general. But with that being said, man, I just want to see how Apple moves overall. First link in the description below, I have a bunch of courses to help you guys become more profitable. I have a long term that gives you guys 40 free stocks to outperform the S&P 500, especially in this time. So go check out these courses. With that code down below, you guys can get 50% off, and the courses are already relatively cheap. We also got some bad news overall for farmer stocks. The tariff can be eventually up to 250%. That is kind of insane, but he basically just want to get lower prices on drugs overall, and he said that he sent 17 letters to drug makers calling them commit steps to lower the U.S. drug prices by September 29th. So keep this in your mind. If they don't lower the prices, we might see a higher tariff on them. And honestly, this is going to make the prices higher overall. So AMD is selling off after earnings and bringing TSM and other chip stocks with it. Their EPS came in at 4.48 and a revenue of $7.6 billion. Expected was 0.79 or 0.49, I'm sorry, and 7.4 billion. So honestly, did not do too bad overall, but the stock did start selling off because of this. Third quarter beat expectations, which was 8.7 billion, and the estimate was 8.3 billion. They also lost $800 million from Trump's chip ban. With that being said, it isn't as bad compared to how much like Nvidia lost before. But like I said before, their data center didn't really look too good. So that's what the big sell-off is really doing. But they said the AI chip demand is pretty good. With all being said, we're going to talk about some other earnings as well a little bit later, especially Open Door. A lot of people were looking at Open Door. But Wednesday, tomorrow, or today, today before open, we have Uber, Shopify, and McDonald's. And after close, we got AppLovin, IonQ, and some other ones. Jack in the Box and DraftKings. DraftKings is basically the Robin Hood of gambling right now. So keep that on your mind. And tomorrow we have D-Wave, Celsius, Lilly, and some other ones. Sony before open. And then some other ones too. Pinterest, maybe big. So like I said before, the PMI and ISM didn't really come in as good. But today, we don't really have too much. We just had some Fed governors coming out. So, I mean, that can potentially move the market depending on what they say. But it is at 2 p.m., so 2 hours before market closes. But Opendoor stock has recently experienced a massive surge, not due to the company's performance, but because of it becoming a meme stock fueled by speculative trading from retail investors. This is similar to what happened to GameStop and AMC in 2021. They had years of losses and grappling with the potential delistings when it became a meme stock. Then in a matter of days, the real estate company rallied 460%, as everybody's seen in the past. If you guys got into that, if you guys made some money, comment down below. They did beat the average estimate of $17.5 million, and they basically said that they earned $23 million. So they beat expectations, but honestly, not really looking too good overall for their stock. So big earnings yesterday was mainly Palantir and AMD. We already covered Palantir, but we're going to cover it again, you know. But investors and market analysts were met with a varied landscape of corporate earnings on Tuesday, August 5th, 2025, as several key U.S. companies across technology, automotive, and hospitality sectors reported their latest quarterly results. The day saw significant stock movements in response to both earnings beats and misses, as well as forward-looking guidance. Main ones in focus, Palantir and AMD. So Palantir was indeed a standout performer, with the stock soaring after reported strong second quarter that surprised analysts' expectations. First time hitting $1 billion, everybody knows that. The data analyst company announced a significant beat on both the top and bottom lines. The positive results were largely attributed to the surging demand for its AI platform. In response, several investment banks raised their price targets for the company overall. In contrast, AMD saw its stock decline despite reporting record revenue. While the chipmaker's revenue exceeded expectations, its earnings per share EPS came in slightly below expectations. The market's negative reaction was also fueled by concerns over performance of its data center segment, a critical area for growth in the AI-driven market. So we also seen Rivian not really do too good, and they're selling off right now, but the automotive sector shows a mixed picture. The electric vehicle market also delivered a mixed set of results. Rivian Automotive reported second quarter revenue that topped analyst expectations. However, the company also posted a wider than expected loss per share. Despite the loss, the electric truck maker reaffirmed its production guidance for the full year. Meanwhile, Lucid Motors missed both revenue and earnings per share and estimates for the second quarter. The luxury electric vehicle maker also revised its full year production forecast downwards. The disappointment results led to a drop in the company's stock price and the aftermarket trading. And honestly, 246 to like 224, that isn't like that's honestly a big loss if you like look at the percentage wise. But honestly, man, it is pretty bad, even though they lowered their whole guidance too. We also had SMCI. I got some of this in my long term, so I'm not really that happy right now, but can dollar cost average into it. But Supermicro, SMCI, a provider of high performance servers, reported fourth quarter revenue that fell short of Wall Street's expectations. Honestly, didn't really do too good overall. So in the hospitality sector, Marriott International, MAR, delivered second quarter results that showed a year-over-year increase in both revenue and adjusted diluted EPS. AMGN, also a leading biotechnology company, pleased investors with the second quarter earnings on revenue and both beat expectations analyst forecast. Core Natural Resources reported a significant year-over-year increase in revenue for the second quarter, although the company also posted a net loss overall. It still did pretty good, but I mean, it didn't really beat earnings overall, but the EPS did pretty good. Or the revenue did pretty good, but the EPS didn't do pretty good. But overall, the earnings reports from August 5th painted a complex picture in the current economic environment, with some companies capitalizing on growth trends like AI, while others face challenges in their respective markets. The varied results are likely to keep investors on their toes, and as the earnings season continues, just keep all this on your radar overall, man. We're kind of mixed right now with the earnings results, but that is earnings for you guys in general. Let's get to some supports and resistance and some plays. The first off, man, first one on the list is indeed after AMD's earnings. We might either get a gap back upwards and or continue to the downside. So to the downside, I'm going to be watching that 163.5, 161.5, and that 160 level flat. If we start going to the upside even more, filling some of this gap upwards, I'm going to be looking at that 165.5, 168, 170, 172.5, 175, and then that 178 to that 180 level, but only if we fill the gap back upwards. It is August 6th, so honestly, man, the V-shaped recovery from last year started August 8th. So keep that on your mind, because maybe we might get a V-shaped recovery. Maybe we might get some good news overall with trade, and or we might just continue to sell off, because honestly, the second term presidency, it does tend to go down like 3.3%. And how the market is looking overall, man, it is looking like we're just making higher lows overall and just continuing this drop downward. So that's probably what we're going to be seeing. Just this, maybe we might get like a gap upwards in the morning and then just start selling off throughout the day for overall stocks in general. But for the SPY, man, if we can break this gap, man, we might look a little bit better overall. But look at that 631.5. 633, 635, and then all the way up to like that 637.5 to that 640. If we do start gapping downwards, look at that 629, 627.5, 626.5, and then all the way down to that 620 level flat for the SPY overall. For NVIDIA, man, same thing with NVIDIA, man. We're either going to gap down more and or go upwards. This chip stock or this chip tariff or semiconductor tariff doesn't really look too good overall for chip stocks. But to the downside, look at that 176.5, 175.5, 174, 170. 2.5 and that 170 level flat for NVIDIA. If we start going upwards, look at that 177.5, 178.5, 179.5, and that 180 level for NVIDIA. Please take your time trading. Next one indeed is going to be Apple. We have been holding that 202.5 range, and that's been a buy zone for me for a while. And honestly, man, you can continue buying off this buy zone until we break below it even more. Rinse and repeat. Just don't overtrade. Don't put too much money into it. If you're trading with $500 with your first 202.5 level, trade to 500, trade 500, trade 500. Don't add your profits to it, because once you lose, man, you're probably just going to lose one day worth of trades if you do it the correct way. With that being said, man, to the upside, I'm going to be looking at 204.5, 205.5, 206.5, basically just the dollar zones, 207.5. And then finally, that 210 level. To the downside, if we do start itching down lower, I'm going to be looking at that 203, 202.5, 202, 201.5, and that 200 level for Apple overall. It is moving pretty slow, relatively slow, unless we get news, but we're not really getting any news with Apple overall. We did beat expectations, but honestly, man, just please take your time with Apple overall. With that all being said, though, man, thanks for watching the video. Smash the like button, subscribe if you guys are new. Comment down below what stocks you guys are trading, how much money you guys made so far this week. It is Wednesday, so you guys can maybe YOLO some trades. But when Thursday and Friday comes, that's when you got to lock in your profits. Don't trade as much. Don't risk too much money. And just, get ready for next week. Thank you for watching the video. I'll see you guys in the next one. Peace out.